NIO just had the kind of week that turns heads. After months of struggle, months of failing to hold the $5 line, the company finished Friday at $6.34 a share. That's a weekly rally of more than 15%, capped off by a massive surge on Friday alone where the stock jumped nearly 15% intraday and even added more gains in the aftermarket. It wasn't just a good week, it was a breakout. For the first time in over half a year, NIO strung together 4 consecutive closes above $5, busting through a ceiling that had turned into a psychological weight on the stock. The technical picture flipped, the sentiment shifted, and suddenly people who had written NIO off are asking again, does this company still belong in the EV race? And more specifically, how does it measure up against the two giants everyone compares it to, Tesla and BYD? That's the question worth exploring this weekend, because while stock prices move day to day, competition in the EV world is long-term. And the story of whether NIO has staying power rests not just in Friday's green candle, but in its strategy, its products, and the confidence it can inspire relative to its heavyweight rivals. Let's start with what made this week so special for NIO. At the macro level, the Federal Reserve gave markets a reason to breathe. Jerome Powell's speech at Jackson Hole signaled that a rate cut is likely coming as soon as September. For months, higher interest rates have been one of the biggest drags on growth stocks, making it more expensive to finance expansion and harder for investors to justify long-dated growth stories. The dovish tone at Jackson Hole flipped that narrative. Treasury yields slid, the dollar softened, and money rotated back into growth and EV names. NIO, weighed down for so long, became one of the biggest beneficiaries. But it wasn't just macro. NIO also put new products into the spotlight. The unveiling of its updated ES8 SUV turned heads this week. It's the largest pure electric SUV in China, a premium 3-row model designed to compete directly with Tesla's Model Y. And critically, NIO priced it to win. Under the company's battery-as-a-service subscription plan, the ES8 can be had at a price point around $43,000, very competitive in a segment that has been all about value for money. That positioning matters in a market where Tesla has been forced to adjust pricing repeatedly to defend share. The ES8 is NIO saying, we can still go toe-to-toe in the premium space. Then there's the Onvo L90. This is the model that could redefine NIO's place in the market. Analysts have been buzzing with projections that the L90 could reach 10,000 units per month by the fourth quarter. To put that in context, NIO's current deliveries average between 20 and 30,000 cars monthly across its lineup. So adding 10,000 just from the L90 is potentially a one-third increase in volume. That's not just incremental, that's transformative. The Onvo is NIO's mass market play, its attempt to scale beyond the niche premium brand image and enter the territory where BYD currently dominates. This combination, an updated premium SUV with competitive pricing and a mass market SUV with high projected volumes, gives NIO a story it hasn't had for a while. It's no longer just about surviving, it's about competing. So let's set NIO against Tesla and BYD for a moment. Tesla remains the global benchmark, with the Model Y as one of the world's best-selling vehicles, period. BYD is the powerhouse of China, with scale that dwarfs everyone else. These two are the giants. But what NIO showed this week is that it can still carve out its own space. Unlike Tesla, NIO has built an infrastructure moat with its battery swap network. Unlike BYD, NIO continues to innovate in the premium and near-premium space while layering on a mass-market option. It doesn't have the same scale, and it doesn't have the profitability yet, but it has uniqueness, something investors had begun to forget. CEO William Li has been framing this stage as a harvest period. For years, critics hammered NIO for its spending on infrastructure, research, and international expansion. It was a cash burn story. Now Li is saying those investments are beginning to pay off. Whether that's optimism or reality is up for debate, but in a week like this, investors are ready to give that message the benefit of the doubt. Add in the fact that analysts like Macquarie have stepped up with upgrades to outperform, and the tone around NIO has clearly shifted. Of course, Tesla and BYD aren't standing still. Tesla is doubling down on AI, autonomy, and global production efficiency. BYD is pumping out vehicles at a scale NIO can only dream of and entering overseas markets aggressively. Both companies are profitable, while NIO still is not. That's the measured part of this conversation. One good week doesn't erase the structural challenges NIO faces. But here's where the optimism comes in. Stock markets are forward-looking. Investors don't buy what a company is today, they buy what it could be tomorrow. This week proved that if NIO can align macro conditions with product launches and analyst support, the market is still willing to see its potential. The fact that it not only broke $5 but held above it for 4 straight sessions shows that traders and long-term investors alike are rethinking its trajectory. So what comes next? The immediate question is whether $6 becomes the new floor. If NIO can consolidate above that level next week, the technical targets shift to 650 and then 7. That would reinforce the sense of a real breakout rather than just a relief rally. Volume will be key. Friday's move was backed by heavy trading, exactly what you want to see in a rally with legs. Fundamentally, investors will be watching closely for delivery updates, particularly any early read on ES8 pre-orders and Onvo traction. If the 10,000-day-month forecasts start to look realistic, sentiment could shift sharply. And, of course, the Fed remains a wild card. If the September cut comes through, growth stocks like NIO get more oxygen. If not, volatility will return quickly. So does this week prove NIO still belongs in the EV race? I'd argue yes. Not because it suddenly became Tesla or BYD, but because it reminded the market that it has a strategy, it has products, and it has the ability to surprise. In a field this competitive, that's enough to stay relevant. The ES8 takes the fight to Tesla in the premium segment. The Onvo L90 takes the fight to BYD in the volume segment. The battery swap network remains a unique differentiator. And the stock itself, after months in the doldrums, is finally giving investors a reason to pay attention again. In summary, this wasn't just a breakout week for NIO stock price. It was a breakout in perception. For months, the question was whether the company would even survive the brutal competition in China. This week flipped the script, asking instead, how far can NIO run if it executes? The road ahead is still challenging, but for the first time in a long time, NIO has momentum on its side. And in markets, momentum matters.